Hey everyone, it's Dave Markowitz, part of the Markowitz Group, and today I'm going to go into a detailed video of the real estate market being as September 2022 and where we feel this market's kind of heading to in the fall and into next year. I got a lot of data in this video for you guys to kind of review with graphs and whatnot, and some of the topics that we will be speaking about for this video will be the mortgage projections coming into next year, where we think mortgage rates will be, as well as home price appreciation. And, if we do see appreciation going into next year, as well as home price forecast. And then last but not least, we'll talk about affordability and what it actually costs to own a home going into next year. So a lot of data for you guys. Hope you enjoy it, and let's get into it. All right, thanks. All right, everyone, let's get into this September of 2022 and our market real estate report. This is kind of real hard data of where we see the market heading to, and I just wanted to kind of go through it and with graphs and whatnot and show you guys kind of a PowerPoint slideshow. So I will go through this report through each slide and kind of give you details of what we are looking at here so you guys can understand it. So let me just minimize my screen real quick and let's get into this. So this is the market update for September 2022. And again, I'm Dave Markowitz, part of the Markowitz Group. And let's get on into the first slide here. So, okay, we are looking at mortgage rate projections. And this is kind of now where we're seeing the mortgage rates are going to be going into for this, and where they're at this point right now, and what's been happening with mortgage rates. So as you can see where my cursor is, we've had a lot of volatility in the mortgage rates as of recently, and this is really what's been changing the market. So as of a couple months ago, the market was super hot, and it was definitely a seller's market, and we were sitting at rates down, as you see down here, in the threes, mid threes, and then starting getting to fours. And as we started getting up to around here in the fives, I'd say right around, probably around here, around July, we started seeing a market shift, and it is really changing the way buyers are looking at it. A lot of buyers had to pull back because their mortgage rates have gone up and their affordability has changed. So we're starting to see a lot more inventory come on the market, but also these interest rates are affecting what is happening right now in the market. So you can just see again how the graphs are going down, and you can see here's August 11th, August 18th, August 25th, and then here's September 1st. We're sitting at 5.66. So here, as of August 2022, these are projections by different people in the industry, such as Freddie Mac, Fannie Mae, the Mortgage Bankers Association, and NAR, which is the National Association of Realtors. And as you can see, Q2, the fourth quarter of 2022, these are what their projections are at, and they average about 5.4. And as we get into next year, you can kind of see where it's at. So they really don't see it kind of stabilizing or even coming down till the third quarter of 2023. And that is because we are in a recession, and they're hoping as we start pulling out of the recession, they will start be able to lower some of the rates and get us out of the recession. So a housing economist by the name of Lisa Sturtevant said, after the end of the summer lull, and as mortgage rates stabilize, we may see a return of buyers and a relatively strong fall housing market. So let's talk about the appreciation right now of what's happening in the market. So Mark Zandi, who is a chief economist at Moody's, said, I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. So we are starting to see right now in the country, sellers starting to reduce prices. That does not mean that it's a housing crash. We are seeing what's called a deceleration in the prices. So we're not seeing that steady growth of appreciation that we've been seeing over the last couple of years. And again, as I've mentioned in other videos, the last couple of years, folks, were an anomaly. That was not a normal market. And we need to get back into a normal market that we saw really in about 2016, 17, and 18. And those were actually really strong real estate markets, and that was a more normalized market. So here we see a graph about appreciation slowing, not depreciating. So you see this line right here, the zero line, and underneath would be depreciation. These were as averages going from January, February, March, April of what Corelogic thought the appreciation would be. And as we're now heading down, and you can see July and August, I believe it's going to go down even more. So the appreciation is definitely slowed. So we are getting into what's called deceleration. We are not moving in an upward momentum as fast, but we're not below this zero line where we are in a depreciating market at this point. Things may change. So here's Corelogic and their latest Homes Insight report, and they wrote, annual home price growth slowed for the third consecutive month in July, but remained elevated at 15.8%. As 30-year fixed rate mortgages neared 6% this summer, some prospective home buyers pulled back, helping ease overwhelmed, heated, and unsustainable price growth. Looking ahead, Corelogic expects to see a more balanced housing market with a year-over-year appreciation slowing to 3.8% by July 2023. So what does that mean? It still means that we're going to be going and having appreciation, but at a much, much slower rate and a much more manageable rate. Because what was going on is the prices were going up so quickly that home buyers were just getting priced out and they couldn't afford it. And so now we're starting to see a more, again, normalized market. So as we're going into home price forecasts, as we spoke about for 2022, these are the averages of all these seven, Fannie Mae, Freddie Mac, National Association of Realtors, Zelman, Corelogic, the Mortgage Bankers Association, and where they think the forecast for 2022. Now, this has been readjusted, just so you guys know, because at the beginning of this year, it was much, much higher, and it is starting to come down as the averages have changed. Okay, so let's talk about affordability, because this is a real main thing that's hampering right now in the market. And when we speak about affordability, I want to talk about three things. The first is home prices, the second is interest rates, and the third will be wages. And all these three factors really go into how you can afford a home. Okay, so affordability at historically low levels. So we are seeing right now a very big problem, and that is because we have just dropped below this line right here. And what it's really saying is it's actually costing home buyers more to own a home, and inflation has a lot to do with it. So their wages are going down, everything is costing more, so their dollar's not going as far. So as you can see, this is 2021 where we're at and how it was in terms of affordability. From here, from 2019 to 2015, you can see when we had the market crash and prices really went down. But we haven't seen this kind of number since all the way back in 1990. So this is a concerning number because it's costing people a lot more now to own a home. They usually say it's about 25% of what your income is to have your mortgage payment. So National Association of Realtors, compared to 1 year ago, the monthly mortgage payment rose to $1,944 from $1,265. So that's an increase right there, folks, of 53.7%. So this is where we're really seeing the issue right now, and it's costing more to own a home. Everything's costing more. So here's the monthly mortgage payment and how it increased. And this is a key number right here. So we're talking June of 2021. And the average at that point, remember, this is a national level. This is from the sources, National Association of Realtors. The average was $1,265 a month for a mortgage payment. However, today we're at $1,944. So this is really what's really slowing down the market at this point. It is costing people more to own a home. Let's look at this number. We've just broken that 25% of what I was mentioning about before of the income ratio. So the mortgage payment to an income ratio, it assumes a 30-year fixed rate mortgage with a 20% down payment. And we're starting to break over 25%. You can see where we're at in 2018. So it was much more affordable for someone to own a home. And today, because of inflation and all the factors that are happening, everything's costing more, and it's really biting into that mortgage payment. So this is a factor right here. Let's talk about what is the median household income against qualifying income. And this really shows how much harder it is to own a home, let's say on the West Coast, because of the median income is about 98,000 and change. And the red column here is the qualifying income. You can see this is kind of really tough for somebody to own a home. It's not affordable for somebody on the West Coast unless you're making way more than this money to afford a home. Now, if you look in the South, it's pretty much on par. So that's more of a straight okay, they can make their mortgage payment based on what their income. Now, here's interesting, the Midwest. You can see in the Midwest, it's flipped. So, they're not making as much, but they still can qualify. And, they still have plenty of room in terms of what their mortgage payment. And again, Northeast, and this is the US as a whole. So it's kind of almost even on that point. So you guys as buyers, what can you do now that it's, the market's changing and, it's still costing, so many things. So one of the things that we're talking about is maybe expanding your search area and criteria. So let's say, for example, I'm going to give you an example of Nashville right now. So if you wanted to live in Nashville proper, prices have gone up. So maybe you start expanding outward into, cities that are out of the Nashville area, maybe going about 20 to 30 miles out of there and starting expanding the search to bring down some lower prices. Number two would be explore alternative financing options. So, right now we've been at most people have been at fixed mortgages. You may want to look at, an adjustable. And if the market changes, you can always refinance down the road. So you may want to look at that option. Speak with your lender. I have a great lender that I work with in Tennessee, and we can speak to you about those options and give you different things that you can kind of look at in terms of exploring, how to get you in that home. Number three is you can also, look at grants, gift funds, and there's a resource here called downpaymentresource.com. And you can just go on there, put in some information, and they can show you if there's certain areas, depending on where you live in the United States, what kind of funds are available for, let's say, a first-time home buyer. But there's different resources out there that many people don't know about. So downpaymentresource.com is a good place for you guys to go and check out and see what they say. Okay. So I'm at the end of this video. I hope this data was good, but I just also wanted to share for you guys as we're going into the fall. I have my fall buyer and seller guide that's free for anybody that's interested. And it's basically giving you all the hard numbers and data that we just spoke about for you guys to review. It is in a PDF format. So if you do want it, just leave a comment out in the message, or shoot me a text or call me, and I will get this over to you guys. It's a great thing of information. It really goes into hard detail of where we're seeing the market at this point. So I hope this answered a lot of your questions. We are seeing a shift. It is not a crash. We are going back to a more normalized market. Again, inventory, just so you guys know, we're sitting at about 3 months right now of inventory. Normal inventory is at 6 months. So we're still in a seller's market, believe it or not, but things are changing. Houses are sitting a little bit longer on the market. And so these are the things that we're seeing that's happening in our industry at this point. So again, I am Dave Markowitz, and let me just bring you back to right here. Okay, so just want to tell you guys, thanks again for watching. I'm Dave Markowitz, part of the Markowitz Group. If you are looking to move, I am licensed in Tennessee and California, but I also have the ability to help you if you want to leave. And, a lot of guys know that right now I'm working on people that are reaching out to me from these liberal states that want to move into a conservative state. I can help you move into about 16 or 17 red states at this point. So let's say you want to move to Florida or Texas, Wyoming, Idaho. I can help you with those states as well. So reach out to me. But I'm here to answer any of your questions. I appreciate you guys listening. And I'm really this is just informational for you guys, and really gives you to show you what's going on with the market right now. So thanks again for watching. I appreciate it. You guys have a great rest of your day, and take care. Bye now.